Welcome back to this special series of Farmers Inside Track. Today we are unpacking the shifting vegetable market landscape as part of the Autumn 2025 Absa Agri-Trends report. Absa's agricultural economists Marlene Low, Kensani Mashimbi and Zama Sangweni join Ivor Price to break down the latest trends affecting the vegetable industry, including Botswana's recent decision to lift its ban on SA vegetable imports and the outlook for key crops like onions.
So, from trade shifts to input cost and water management, South Africa's vegetable sector is navigating a complex landscape, and this is highlighted in the latest edition of Absa Agri-Trends. The Autumn 2025 report has just been released, and we're unpacking what's shaping the industry right now and how these factors are influencing the sector's future, Zama. Let's begin close to home in Botswana.
Yep.
Botswana has now lifted its import ban, reopening its market to South African vegetable imports. What impact could this now have on us, the country?
A very welcome change in our space. I think we're quite optimistic about this improvement. We will see their gates opening more specifically for your bigger vegetable commodities, onions, potatoes, tomatoes from April in 2025. But just to contextualize the situation, we did experience import bans for vegetables from Botswana, and we actually are a big exporter for our vegetables into Botswana. So what we experienced, if I can use the onion industry as an example, for 2024, we experienced a market oversupply because we could not filter through some volumes into Botswana, which is a very close neighbor. It's an advantage for us in terms of, if you're thinking of a distance perspective, it is quite cheaper for us to export to Botswana as opposed to your deep sea regions like the EU and the UK. So what we see now is we are in a better position. We're quite excited to be moving more volumes in, because what that will mean is that if our onion industry can move some volumes into Botswana for 2025, we will not experience high or oversupply levels for onions. And it translates again to a pricing perspective. We did see onion prices coming under pressure, and one of the factors that contributed to that was because we had volumes that was destined for Botswana within our domestic markets, and so that put prices under pressure. So we are expecting, Marlene is now going to say I'm stealing some of her section, but it's an example that I like to use because it basically shows you the impact of what happens when there is an import ban imposed, and as opposed to what happens when the opposite is now going to be coming into force in 2025.
Are you expecting change supply and pricing dynamics to change for local farmers though?
Yes. So if you have a larger export or market access again to Botswana, it is an advantage. I'm gonna stick again to my onion example. If we can export more, we're obviously trying to influence local supplies. And if local supplies are lowered, we will have a higher profit or price point for local onion prices. So I think it's good news for our vegetable producers in South Africa.
Zama, we're talking about Botswana, but in essence, I think our relationships with agricultural trade in some of our neighboring countries seems to be a bit complicated.
Yeah.
Every now and then there's a different country in the headline.
Yes, I think Namibia comes first to mind. So Namibia did also impose import bans, I think from 2022, and they've been expanding on a yearly basis. And they're actually doing this in order to support their local industries, for their producers to also be in positions where they can supply for domestics, and also just give them the opportunity, or maybe take a little bit of a China stance, be a little inward looking. So yeah, that has been a negative impact, because if you consider, let's take for example another market that we export to, Angola. So Angola is, in terms of geographics, it's a bit further from South Africa. We do have an export tariff in that market. So if I had to ask you, do you want to export to Namibia, which is SADC region? There is preferences when it comes to trade versus Angola, you'd obviously prefer to trade with Namibia. So we haven't heard anything significant in terms of what changes are expected from there. I think they're still doing some inward-looking work, but it would be a great opportunity if they would take a similar stance to what Botswana has now done to reopen those gates.
And then we haven't even touched on Mozambique, Zimbabwe, for example.
Yeah, I'll take an example for potatoes. So I think Zim has been a very difficult market. We've seen low export volumes to that region. But Mozambique, for example, I think in 2024, we were in a position or we viewed Mozambique as a great alternative market for some of those volumes that we couldn't move to Botswana. But we faced challenges. If you remember, there was a border closure, there were political issues in Mozambique, and that created a little bit of market barriers, because if you can't send through produce, then it becomes a problem.
My mother's a great barometer for prices. She would stand in front of a shelf and say, "Hey, the price of onions have come down," or
She needs to join the team.
yeah, she thinks she's many things, including an economist. But onion prices have come down significantly since 2023. And I'm wondering what's behind this, Marlene. Was it supply glut, lower demand, something else?
Yeah, I think it goes back to Zama's story. So in 2023, there was a global shortage of onions. And so I think what's actually very rare is we exported onions to the EU. So for the first time, we saw significant volumes going into deep sea markets, which you would typically not expect for something like an onion or a potato, which is essentially low value to weight. Most vegetables are. So only those premium vegetables would usually, a small part of the crop that is considered premium would go into these markets. And in 2023, we saw more of that being channeled into these markets. I think we saw a reversal in 2024. So, we don't expect that to necessarily happen soon, but it just shows you the effect of climate, because that was essentially an outcome of various big onion producers around the globe performing worse than their average yields. And so other countries had to fill that gap. And it just goes to show you increased climate variability would result in these opportunities coming by more frequently, but also presenting more challenges in the way we navigate climate.
How has this affected farmers or even margins?
Yeah, so in 2023 we saw strong margins for onions, and then to my earlier point, high prices takes care of high prices. So we saw a proportional supply response, which then drove prices down in the subsequent seasons. So, I think there we're more or less back to price levels that we saw pre-2023.
Yeah.
Zama is close to that. She will be able to speak to the specific price points. But yeah, again, the nimbleness of our supply chains will enable us to act on these opportunities or not. So market access, the way we organize our logistics, the efficiency of our ports, all these issues come into play when these opportunities present themselves.
Zama, is there anything you'd like to add?
Yes. So just adding on to what Marlene alluded to, in terms of production costs, go read the Absa Agri Trends edition for more details. But I think if you consider what happened to fertilizer prices in 2023, which is a huge input cost specifically for potatoes, there was some spikes in there due to the Russian and Ukrainian war. So we did see an escalation in the input cost of production. If you add other factors, you look at the cost of electricity. So the electricity tariffs were slightly higher in the same year as well. You look at the number of load shedding days were also higher. Thank God we are in a better position now. So those top three, I think, input drivers do play a role in input costs. And from 2024 into 2025, I think we are in a relief state. So that does contribute to not as high input costs for vegetable producers in 2025.
Look, I hope you didn't jinx this for us now because you're not supposed to use the L word, load shedding, because ESCOM might be listening. Kenzie, regardless of the commodity, input costs like oil, electricity, fertilizer, it plays a big role in vegetable farming. And I'm wondering what's your outlook for these markets?
Yeah, they play a significant role in input costs for agriculture, which we depend on. Maybe to start from the vegetable production, they're already producing a significant amount under irrigation that requires electricity, so it impacts their production. So, and Sama has alluded to the tariff story when it comes to that, but the bright side, I think it's I'm going to jinx it again, and the outlook for and ESCOM's generation capacity having improved from the levels that we saw. So at least in that front, when it comes to electricity, we only need to look at what's happening in terms of prices, provided that load shedding does not return. But then when we now look at fertilizer, so we are a major importer of fertilizer. I think in 2024, having imported, I think, something to 180. I'm not sure about the number, but it's significant. And the fact that we are a net importer, the macroeconomic environment comes to play. So how the exchange rate dynamics unfold with that risks that Marlene alluded to of depreciation, making that commodity slightly more expensive. But the outlook now is that prices are on a downward trend for fertilizer, though they do remain above pandemic levels. And another commodity I think to monitor is oil, and this cuts across all production in agriculture. It's a tricky one, oil, because it did follow a downward trajectory and is now trading in a higher band. So it's fluctuating on a higher band than what we saw pre-COVID. And what happens there is that the demand is there's still some sustained demand. And producers are very wary of responding with high production there because they've been beaten before with oil prices dropping significantly. Another added risk to that is the increased focus in green energy. So there's a little bit of supply side dynamics that we continue to monitor on the oil front, but also there the consensus is that prices will go down, and with risks to the outlook remaining as the exchange rates and the Middle East and geopolitics as a whole with the Black Sea war as well.
Kenzie, if we could translate this for farmers, should they be bracing themselves for more volatility?
I think we are heading generally to a lower trend, but volatility, it will depend on how the geopolitics unfolds, on how the exchange. So it becomes a broader conversation. That input costs are closely linked to what happens in the macroeconomic environment because we are a net importer.
So electricity is, of course, one thing that we all depend on. The other is water.
Yeah.
And South Africa is a water scarce country. It's a key concern for sustainability, Zama. We've seen recent media reports on smart water use, particularly in the Sunveld region. From your perspective, how do you view access, quality, efficiency when it comes to long-term sustainability?
Extremely important. So I'll paint a bit of a picture on why Sunveld is quite an important region. It's an all-round, all-year production region for potatoes. So it's able to fill in gaps in the markets whenever your Eastern, Western Free State or Limpopo region, which forms your top 3 production regions for potatoes, cannot come through in terms of volume. So it's extremely important. And at Absa, we value and we actually do take a look at what our clients are doing about water, or in fact, we actually have a broader approach in terms of ESG, and water forms one of the pillars for that. So we have seen that the Sandveld region was imposed with the 30% water reduction. And when we analyzed, I think in the previous year's agri trends, we actually noted out that it probably could have not been the spring edition. I think it was the autumn. We noted that there's going to be significant price increases because remember I said whenever Sandveld is not able to fill in those gaps, there would be potential price spikes. So you can sort of imagine the risk associated whenever there's a water reduction in position, because that means the region cannot produce as much as they would compared to previous years. So it has been a risk. But I think the good news is that we've seen efforts from that region coming through. We've seen how they've been able to reduce the water reduction. Some farmers, it's something from 20% to 30%. Later on, we'll delve into a little bit of what we've done, not necessarily in water, but in a sustainability and ESG space.
Marilyn, anything you'd like to add?
No, I think Zama covers it. Obviously, the water conversation is much broader than just your access to water. I think we're trying to stay close to issues around water quality. It's often cited in conversations with our clients that some of their biggest risks actually emerges off farm. So pollutants that they're not in control of. So that remains something that is a concern and hard for all stakeholders involved to manage. I think the water issue in the Sandveld just highlights the importance of sound resource management, and that's actually at the heart of a sustainability strategy.
That concludes today's episode on the future of the vegetable industry. Thanks again to Absa's Marlene Low, Kensani Mashimbi, Zama Sangweni, and Ivor Price for their expertise. Be sure to download the full Absa Agri-Trends Autumn 2025 report for free at foodformzansi.co.za/agritrends. Stay tuned for the next episode in our series, where we explore the future of South Africa's carbon-conscious agricultural sector.